The fundamental analysis of the coin is positive. What does that mean exactly? Hi, my name is Fernando Bender and we have the Wild Horses channel, and we'd like to discuss today about an important topic, which is fundamental analysis. Sometimes, in our opinion, most often it is applied wrongly in regard to cryptocurrency. So, what does it mean, fundamental analysis? When someone speaks it nowadays, he means that he read about the technology, he read the white paper, he maybe saw some opinions about analysts and about the services, the potential market, and what it will mean to the coin, and then he says this is the fundamental analysis. In no way do we agree with that. So in our view, the correct approach for fundamental analysis in cryptocurrencies, first, it is still an open problem, meaning there is not an established solution widely accepted for so. Now, in regard to stocks, which are of course a fraction of an ownership of a company, you can apply fundamental analysis, and basically one of the methods used is discounted cash flow, where you project the cash flow that the company generates through its business in the future, and then you bring back this cash flow, meaning the incomings and outgoings of cash, to the present. So with the present value of all this cash flow associated with the current existing cash in the company, you have an idea of how much cash it will generate from now till an horizon, say 20 years, 10 years. All this in the present, divided by the number of stocks, will give you an idea of the fair value of that stock. So the discounted cash flow in the present value divided by the number of shares of this company will give you, for instance, a fair value of that stock, for example, at the end of current year. So you can compare current price of the stock with this fair value to have an idea if you are subjected to an upside or a downside. Of course, according to George Soros, that apply his reflexivity theory to financial markets, you can have a mismatch between the fair value, or estimated fair value, and the value of which that asset is traded in the markets right now. So you can have, for example, right now I have some companies, for those who are following our channel, you know that there are companies that have about 400 years of profit in their stock price, meaning the stock price, the price of one share equals 400 years of its profits. That's unbelievably over-evaluated. It's beyond belief. So that's too much, and that can happen. So fundamental analysis alone is not a guide for where the price will go, especially in the short term, but it gives you a reference if it is overvalued or undervalued. It's a very good reference because it's based on something real, which is the cash that it generates. What's the difficulty in applying this straightforward to coins, cryptocurrencies? Because first, a company has a specific domain of existence and a reachable set, like where it sells, with whom they trade. They trade in a given country, in a given region, they have a specific client, specific product, specific service with a market price for them. Coins, no, like who will trade them, where, and will use it for what. We're still in the infancy of cryptocurrencies, so we are not exactly sure how much cash flow they can generate. It is no one's guess what that cash flow can be. So it's very difficult to project that in the future and then bring that back to the present and estimate the fair value. But that's the role of the analyst, fundamental analyst of cryptocurrencies. So it's very important to compare, and it might not be possible to know exactly the fair value of a given coin, but you can compare the potential of one against other coins, and that's where it plays an important role. So stay tuned, we will start applying this in the next videos. It might take some time because that takes a lot of study, but this is the way where we're going here. It's to offer you a serious methodology for understanding and seeing through the smoke. Thank you very much. See you in the next video. Bye.